breaking down the finance and business philosophies of Donald Trump and Ali Khamenei and what their economic visions mean for markets, startups, crypto, and you. Let's get into it. 1. Economic DNA. Donald Trump came into politics as a businessman. Real estate, branding, leverage, negotiation. His economic mindset was shaped by private enterprise. When he entered the White House, his playbook was clear. Lower taxes, cut regulations, boost business confidence, push the stock market higher. In 2017, corporate taxes were reduced from 35% to 21%. Markets responded positively. Investors saw it as pro-growth. Deregulation efforts signaled that business expansion would face fewer barriers. For FinTech founders, this kind of environment typically means easier access to capital, strong IPO markets, and a regulatory tone that leans business-friendly. Now contrast that with Ali Khamenei. He is not a corporate executive turned politician. He is a religious authority overseeing a political system deeply shaped by sanctions and geopolitical pressure. His economic framework is often referred to as a resistance economy. That means self-sufficiency, reduced reliance on Western systems, heavy state influence in major industries, focus on surviving and adapting under sanctions. Instead of maximizing market expansion, the focus is resilience. 2 leaders, 2 economic foundations. 2. Banking and FinTech impact. Under a pro-market system like Trump's, capital markets are open. The US dollar dominates global finance. Private banks drive lending and innovation. Venture capital fuels FinTech growth. Under Ali Khamenei's system, access to global banking networks is limited. Sanctions restrict cross-border financial flows. The state maintains influence over key financial institutions. Foreign investor participation is constrained. Interestingly, restrictions have pushed innovation in alternative channels. In constrained environments, financial systems often experiment with domestic payment rails and digital assets as workarounds. Pressure creates adaptation. 3. Global trade strategy. Trump used tariffs as leverage tools. He initiated a trade war with China and renegotiated NAFTA into USMCA. His approach emphasized economic nationalism, protect domestic industries, reduce trade deficits, and negotiate aggressively. Khamenei's approach focused on bypassing Western financial pressure. Iran strengthened ties with China and Russia and worked to reduce reliance on US-dominated systems. Both strategies aimed at sovereignty, but one operated from a position of global financial dominance. The other operated under restriction. 4. Stock market mentality. In the United States, stock market performance often became a part of the political narrative. Rising markets were framed as proof of economic success. In Iran, economic focus is often centered on inflation management, currency stability, sanctions impact, and domestic production. One system celebrates market expansion, the other prioritizes endurance. 5. What this means for FinTech founders. If you're building in FinTech, environment matters. In an open capital system, capital raising is easier. Exit pathways like IPOs are clearer. Global expansion is accessible. Regulatory signals can encourage risk-taking. In a restricted system, innovation becomes necessity-driven. Solutions are localized. Global scaling is harder. Financial engineering often replaces financial expansion. Different pressures create different kinds of entrepreneurs. So, here's the big question. Does innovation thrive more in open, investor-driven capitalism, or does constraint build stronger, more resilient financial systems? Let me know what you think in the comments. And if you want more deep dives into how politics shapes finance, markets, and FinTech, make sure you subscribe. See you in the next one.